presenter for the day, Jesse Bean.
Good afternoon. This is our fourth webinar in the HCA Medicaid Update Series, providing you with updates, helpful tips, and clarifications regarding Washington Apple Health eligibility in Healthplanfinder. Today we will cover MAGI income in Healthplanfinder, or modified adjusted gross income, for those of you who have been maybe working in Rock. I'd like to remind you that when using the questions panel, feel free to ask topic-specific questions for discussion at the end of each section. Next slide. And next slide. The Affordable Care Act changed the Medicaid income eligibility rules for the Children's and Pregnant Women's Medical Assistance Programs and created a new Adult Medical Assistance Program to use modified adjusted gross income to determine eligibility. So today, we're going to look at tax returns to better understand where the income rules come from. So please remember, as we look at the tax return forms, that you do not need tax returns to apply for coverage in Healthplanfinder. This is just to help us understand where the rules are coming from and understand the rules better. So Healthplanfinder asks for the client's household income for the current month. If the client's income changes from month to month, in other words, if it's variable, the client may use one of two methods. The client may use either the average monthly income over the course of several months or the actual monthly income for the current month. If the client needs to report a change in monthly income that is over $150, the client will do so based on how the income was previously reported. So if the client used the income averaging method, the client should report that $150 or more change in income based on that same method. If the client used the actual income for any given month, the client should report actual income changes. Also, remember that last year's tax returns, which report annual income, may not be an accurate reflection of the household's current monthly income. So before you end up using last year's tax returns, and most people probably are not doing this, but if you are, always confirm with the client that the tax return reflects his or her current monthly income. In other words, that nothing has changed since the last year. So what is modified adjusted gross income? Well, it starts with adjusted gross income. And that can be found on the individual's IRS form 1040, 1040A, or 1040EZ. And then that adjusted gross income, or AGI, is modified. It's not a very creative terminology. So the AGI is then modified to add back in foreign earned income, and we actually have a question in our Q&A section on just that issue. To add back in non-taxable Social Security and railroad retirement income. In other words, all Social Security and railroad retirement income are reported. And then finally, to subtract certain American Indian and Alaska Native income. So there are three tax return forms. Form 1040, that we see here, is the most complicated IRS tax return form. However, anyone can use this form. Form 1040A is a simpler version of the Form 1040. However, individuals can use this form if they meet 6 requirements. They have to have only certain types of income and certain types of deductions. The individual cannot itemize deductions. The individual must have taxable income, or the married couple must have taxable income that is less than $100,000. They must have only certain types of tax credits, and they must have no AMT adjustment on stock. Form 1040EZ is, as you can tell, the easiest of the 1040 forms. However, the requirements for use of this form are the most restrictive. Only single or joint filers with no tax dependents, no deductions, no adjustments to income, only tax credit being claimed is the earned income credit. They have to be under age 65. Their taxable income must be less than $100,000, They only have certain types of income, and then there are a few other restrictions. So the 1040-EZ, while it is the easiest form, not everyone can file with it. So we're going to look at how the Healthplanfinder questions map to the Form 1040, the most complicated form, because this incorporates all of the items that the Healthplanfinder was programmed to ask for. Unfortunately, not all of the questions, or the questions in Healthplanfinder, do not match up with the Form 1040. I guess that could also be fortunate because the Form 1040 isn't the most, isn't the easiest form to work with. But just so you understand that the Form 1040 does not line up exactly with the questions in Healthplanfinder. Hence, we have to go through the questions in Healthplanfinder, which we see on the left-hand side of the slide, and then try to map them to the lines in the Form 1040. So starting from the top, we see that wages and salaries and tips are found in line 7, and they are, when Healthplanfinder is asking, are you or someone in your household currently employed, that is where that information is coming from. Likewise, are you or someone in your household is currently self-employed, that comes from line 12 of Form 1040. The unemployment section of or line of 1040 is easily mapped to the question in Healthplanfinder, do you or someone in your household expect to receive unemployment income this month? And here's the first little difference. In Healthplanfinder, we ask, do you or someone in your household receive Social Security or Railroad retirement benefits? Notice how you have a line 20A, or an item 20A, and then an item 20B. Only certain types of Social Security, or actually certain amounts of Social Security, are taxable. However, under the Affordable Care Act, all Social Security benefits are included in Healthplanfinder. So when you're looking at a tax return, you would take what's in line 20A and disregard what is in the far right for 20B. On this slide, we continue mapping Healthplanfinder income questions to the income section of Form 1040, but now it's a little more complicated. So we have this pretty large catch-all question of, have you or someone in your household received dividend payments from companies in which you own stock, shares or ownership, interest payments, both taxable and tax-exempt, capital gains or losses, farm income or losses, or income from partnerships, S corporations, trusts, etc., other than what you reported above for self-employment. So because this is such a large catch-all, that is why we're seeing these arrows come from various line items on the Form 1040. So you have 8A, which is taxable interest, and 8B, which is tax-exempt interest. They're two completely separate categories of tax of interest, and yet they both would be added together and reported when you're answering to this question in the Healthplanfinder. Likewise, 9A, ordinary dividends. Now that captures all dividends, and a subset of that is 9B, qualified dividends. So you would actually disregard 9B. Capital gains or losses are also reported here out of line 13. And rental real estate and royalties from line 17 and farm income from line 18 are all reported in this catch-all question in Healthplanfinder. So if you happen to have someone who has all of these types of income and they're applying in Healthplanfinder, you would want to add all of this income together and include it in response to this question. Now, the question below, do you or someone in your household receive income from renting a home or royalties? That was not included in your self-employment income. That, again, comes out of line 17, but is only part of what's being included in line 17. So as you can see, if you look at line 17, rental, real estate, and royalties are being provided in the second Healthplanfinder question on this slide. But partnerships, S corporations, trusts, etc., that income is being provided in the first question in Healthplanfinder. So, or in the Healthplanfinder question on this slide. So it's fairly complicated, but we actually have a table in the back, which we'll see when we're done with going through forms, which hopefully can be a cheat sheet for you going forward. And this is the last slide analyzing the income questions in Healthplanfinder. So we have a question of, do you or somebody in your household receive an annuity or pension, including military retirement that is not disability related, or IRA distribution income? And here is another example of where you want to be careful of which item on the 1040 you're going to include to answer this question. Here you want to include lines 15A and or 15B and 16B. The taxable amount is what you would include when providing that information in Healthplanfinder. And finally, this last question, which is sort of a large catch-all, do you or someone in your household receive alimony or spousal support, foreign earned income, other claimable gains or losses, or economic development funds from tribes, for example, per capita distributions from gaming? That, to answer that question, you would total the amounts in lines 10, 11, 14, and 21. So that is the income section. Now we turn to the deduction section of the Form 1040 and how this section maps to the Healthplanfinder deduction questions. Now notice on line 37, and so for some of you this may be obvious, but on line 37, that is the adjusted gross income. So what the tax return has done is that we've added all of the income items above, and then it's subtracting out all of these deductions below to arrive at gross income, or at adjusted gross income, at AGI. And so you want to make sure that all of these items are what flows into the modified adjusted gross income number. So on this slide, we have the question, do you or someone in your household contribute monthly to a health savings account? And that comes straight out of line 25 on the Form 1040. And then you have, if you or someone in your household is a student attending a college of higher education, do you pay tuition or other school-related fees? And that comes straight out of line 34. Next slide. So we have this large cash-off question in Healthplanfinder. Do you or someone in your household have any of the following expenses? Alimony or spousal support. Again, these are payments out as opposed to the previous alimony and spousal support, which was income coming into the household. You also are being asked to provide student loan interest, educator expenses, moving costs since January of the current year, domestic production activities, penalty on early withdrawal of savings, pre-tax retirement account payments excluding Roth IRA contributions, or certain claimable business expenses of reservists, performing artists, or fee basis government officials. And at the bottom of this question, we ask, for each of these categories, please provide the amount that the IRS would allow you to subtract from total income to calculate your adjusted gross income. In other words, it's not just a simple matter of the client telling you, oh, I have so much in educator expense, or I have so much in this. There are certain calculations for each of these line items, and it is the result of those calculations that determines what is taxable or what is tax deductible and included in Form 1040. So unfortunately, before the Affordable Care Act, life was simpler. Now, pretty much requires for those with complicated tax returns to get a CPA involved practically. It's pretty crazy. So this is the second slide for deduction line items to calculate AGI. We have one more. And so these two questions show up when the client or in-person assister answers yes to the question, are you or someone in your household currently self-employed? So the first, do you or someone in your household pay self-employment tax? That comes straight out of line 27. And notice is the deductible part of self-employment tax. And then, do you or someone in your household pay into a self-employment retirement plan? That would be an SEP, simple or qualified plan, or pay self-employment health insurance, and that comes out of lines 28 and 29 of this deduction section of the Form 1040. So here's a table that lists out, we covered the 1040, and rather than go through in the 1040A and 1040EZ, the principles are the same, the line numbers are different. So we've just provided you a table that lists out for each of the forms. If you were given a tax return, you would have to take the income from line 7, for instance, and drop it in response to the Healthplanfinder. Are you or someone in your household currently employed? Now here, you'll notice this asterisk. As we noted in several slides ago, line 17 sort of is broken out into two Healthplanfinder questions, and you see that here. And so you just want to make sure that you provide the rental, income, and royalties in response to the question at the bottom of this slide. And then if you have any other types of income that are in line 17, they would go in response to the question right above the last question on the slide. Another or additional section of the table listing out the various forms and the lines that they correspond, or the lines that correspond to the various questions in Healthplanfinder. And then the Healthplanfinder deductions and the tax return lines that they correspond to. Now, the asterisk at the bottom indicates that if the individual has not indicated that he or she is self-employed, but has items on lines 28 and 29 of the 1040, then you would want to include that in response to this question, because obviously the self-employment deduction questions will not pop up if you don't answer that your client is self-employed. And then these are the deduction questions that appear if the client is indicated as self-employed. So in this case, you wouldn't need to include, or you would include lines 28 and 29 in response to this question, and not the question that was on the previous screen. So there are some exceptions, as we noted above, to the general income rules. These will all come out of the Affordable Care Act. So clients do report in Healthplanfinder, as we mentioned above, all Social Security and retirement and railroad retirement income. They also report foreign earned income, which is otherwise excluded from gross income under Section 911. And this would be foreign earned income and certain foreign housing allowances. Clients do not report in Healthplanfinder certain types of American Indian and Alaska Native income. Examples of this type of income include distributions from settlement trusts and rent from lands held in trust, such as reservation land. Now here's some final thoughts on income. Clients should have a reasonable basis for the income they report. If a client is self-employed, the client will want to keep records to support the amount of revenues and expenses the client used to arrive at that income. This should be self-evident, but just keep that in mind. If the client takes advantage of health insurance premium tax credits, remember that the income that is reported in Healthplanfinder is reconciled at the end of the year to what is reported on the client's tax return. And any difference could affect the client's tax return amount. So in other words, if you underreport income and the client gets a higher tax credit as a result over the course of the year, the client could find him or herself owing more in taxes at the end of the year. So now is the time when you're welcome to ask any questions via the questions panel regarding the information we just reviewed.
Okay, we have a lot of great questions. Okay, first one. Do we report labor and industries or L&I income on the Healthplanfinder application? And if so, where do we report that?
So you do not report L&I income. That is not countable income, which is why you don't really find it on Healthplanfinder.
Okay, question number 2. I'm a little confused. I thought Healthplanfinder only wanted taxable income, so thought that people would only report their taxable Social Security benefits.
That is completely understandable. In general, Healthplanfinder does only want taxable income. However, the Affordable Care Act made it very clear that Social Security and retirement benefits have to be included in total, not just the taxable amount.
Okay, question number 3. The paper application form 18001 states to not include SSI income. This presentation, or benefits, This presentation says to include all forms of Social Security benefits. Please clarify. And so you're correct. So SSI is actually, I believe that stands for Supplemental Security Income, and that is not counted. Social Security income that is counted would be retirement, disability, and I believe survivors.
Yeah.
Okay. How would a family who files married filing separately complete an application? Do they need to create separate accounts and applications? How would their eligibility be determined using household income or individual income?
So their eligibility would be determined using their separate income. It is what is reported. Essentially, they're allocating their income between the two spousal members, and so that income is going to be used to determine their eligibility separately.
What is the flow for a tax form 1120S?
I'm afraid I'm not familiar with all the tax form numbers, so I'm not sure which tax form that is.
Yeah, Tanika, if you want to go ahead and clarify for us a little bit, if you want to send another question and give a little clarification on the 1120S, we'll be happy to see what we can do. If not, we can answer you. We can follow up with you later through email as well. Okay, I don't understand how a person can put the health savings account information or health costs at the time of applying at least in October through December when people were considering changing their insurance coverage.
Oh, so that's a good question. Remember that this is for the current month. So essentially, if the family is having certain amounts, for instance, setting aside for a health savings account every month, that family would just include that monthly amount in Healthplanfinder.
What about Social Security income that is provided to a child resulting from the death of a parent?
You would want to include that in Healthplanfinder as well.
Okay. A lot of questions, folks asking when will the slides be available. Like I shared earlier, we are currently recording the session, and we will add that to the training and education webpage on the HCA website. And then also we will be sending out through our various email distribution lists, we'll send out also a copy of the slides along with the notification that the recorded presentation is available. Okay, let's see. Next question. If a person who is self-employed and wants to deduct items such as fuel, telephone services, and repairs, can that also be deducted through the Healthplanfinder?
So yes, but you would need to report the net income. So taking the business's gross income and then subtracting out all of the business expenses to arrive at the business's net income. But that net income is going to be before taxes. That number is all you would report as the self-employment income.
Okay, is child support a deduction?
No, child support is not a deduction.
How would an undocumented parent applying for a citizen child report their cash income?
So if they are self-employed, they would report their income in response to the self-employment question. And remember that income is always monthly income, taking the gross income before expenses and then subtracting out the expenses to arrive at net income. And if that person is working for someone, then that person would report the income in the question asking for income from employment.
Okay, last question. Social Security disability income, does that count? Can you remind me, does that count?
It does count.
Okay.
So now let's review questions that we had received from our February 13th webinar about that related to MAGI income. During the next set of slides, we'll go through the questions and then discuss the answers. And at the end, we'll take questions about MAGI income. So the first question we received was, how many prior months should you use to average an applicant's income in Healthplanfinder? You should go as far back as needed to report accurate current income. So remember that the applicant always has the choice to report either actual current income or current income that is averaged over a certain period of time. And so you might ask, well, what period of time should I be using? And that depends. So let's go to some examples. If the applicant has seasonal work throughout the year that fluctuates, but it's predictable, you should average over the course of the year if you want to use the averaging method. Remember, you can always use the current income method instead. However, if the applicant lost a regular paying job 4 months ago and has been working odd jobs since then, you should average over the course of the last 3 months, because that's more reflective of the applicant's current monthly income. Next question. If monthly gross income before business expenses is listed for a self-employed client and they realize that they have not subtracted their monthly allowable business expenses, can we correct that so the income is accurate? And the answer is yes. Please correct their income by reporting a change in Healthplanfinder and entering their monthly business expenses there. And actually, you would want to report that net amount. So you would take what you had previously reported as gross income, subtract out those monthly business expenses, and enter that difference into Healthplanfinder in the self-employment income section. Next question. What if the income entered in Healthplanfinder made the individual eligible for health insurance premium tax credits, but it was incorrect? Should a new application be created if we expect the individual's correct income would result in an Apple Health approval? And the answer is a definite no. Do not create a new application. In many cases, Healthplanfinder will not allow you to create a new application because the person is already enrolled. And in other cases, it may allow you to create an application, but that may create errors down the line. So you should always try to report the change in income using the individual's dashboard in Healthplanfinder. Next question. For self-employment income, I've been entering gross income and then claimable business expenses separately. The webinar made it sound, and this is that last webinar made it sound like I should just be entering one income, the net income. Have I been entering this incorrectly? So you definitely, if the individual is self-employed, you want to report their monthly business income after deducting allowable business expenses. You want to enter one number, and it's going to be that net self-employment income before taxes. So here's an example. An individual makes $1,400 per month before income taxes and business expenses. They have business expenses of $400 a month. The self-employment income in Healthplanfinder would be listed at $1,000 per month. And this is what you would want to report as self-employment income in Healthplanfinder. Next question, what do you do about negative income when the individual is self-employed? So Healthplanfinder currently does not allow an individual to report negative income. Until they update the system, the individual should subtract the negative income from any other income they may have. If the individual has no other income, then just enter 0. So this may seem a little complicated. So if you have negative income, let's say that your client has self-employment where they had losses last year, or they're incurring losses in the current month, and you have other types of income. Let's say a spouse has Social Security. You would take that negative number and basically deduct that from the Social Security income and enter the difference in the Social Security box in Healthplanfinder. And then if you don't have any other income and you just have this negative number, then you would just enter 0. I had an individual who rents out her primary or only residence which generates rental income, but nowhere in Healthplanfinder can she deduct the mortgage to reflect zero profit. Is there a way to reflect that in Healthplanfinder? So MAGI-based income rules follow IRS tax return rules with a few exceptions. The requirements for reporting income and expenses for rental residential property are complex. The IRS has created publication 527 to explain the requirements, and I took a look at this publication. It's a 25-page technical document with all kinds of rules and exceptions. So there's no easy answer to this question. The amounts the individual reports as residential rental income and expense on Schedule C or Schedule C EZ of his or her tax return should be reported as the net rental income in Healthplanfinder. But because of the complexity of this area and how it needs to follow the taxable income rules, you need to remember that this, at the end of the day, this is the individual's application. And so for something as complicated as this, you want to have your client provide you the numbers and don't try to calculate the numbers for the client. Next question. A person makes $13.75 per hour and works 38 hours per week, and the person gets paid biweekly. Are we supposed to multiply the weekly earnings by 4 or 4.3 weeks? So for applicants who get paid biweekly, multiply their weekly earnings if you have that. So $13.75 times 38, you would multiply that result by 4.3. If you have their biweekly earnings, then you would multiply that by 2.15. When one of the household members works and pays taxes in Canada, do we need to count their income? So as we've been stating throughout this webinar, MAGI-based income rules follow IRS tax return rules with a few exceptions. This is one of those exceptions. For some individuals, foreign earned income that would otherwise be taxable by the U.S. is excluded for income tax return purposes. However, the Affordable Care Act requires this income to be included in the client's application for purposes of applying for health care coverage in Healthplanfinder. And this is that foreign earned income question in Healthplanfinder. Next question, for a person who is 19 years old or older and still being claimed by parents on taxes, do we need to include the parent's income on the person's application? And the answer is yes. If the parents are claiming their adult child is dependent on their tax return, you need to include the parents on the adult child's application. But the child is not applying for coverage for the parents. You also need to include the parent's income on, I think we just had a little typo there. So the answer is yes. Next question, do you add the father's income to the mother's application if they are not married, living together, and he claims the kids as tax dependents on his tax return? So here, if the parents are unmarried and the father is claiming their children on his tax return, you need to provide both parents' income because it affects the household sizes of the children. Question, if a family member is found eligible for a qualified health plan, but later the income changes and would make them eligible for Medicaid, can they still report this on Healthplanfinder? Yes, because Healthplanfinder handles both programs. So if anyone is enrolled for health coverage and needs to report a change in income, if their income falls to the point that they become eligible for Medicaid and they meet all the other requirements for Medicaid, they will be enrolled in Medicaid and they will be disenrolled from the qualified health plan automatically. Healthplanfinder will take care of this for you. Another question, an individual is found eligible for Apple Health based on their reported point-in-time income of $0. They begin receiving income the next month. When he or she reports the change in income, will they lose their Apple Health coverage? And the answer in general is yes. An individual who loses Medicaid coverage because his or her current monthly income now exceeds the Medicaid standard. However, pregnant women and children have continuous eligibility and therefore will retain their coverage through the certification period. So we've come to the end of the Q&A for the MAGI income from the previous webinar, and so we'll open up for questions on other questions on Magi income.
Okay. It is challenging to work with families who have no income now, but anticipate to have a large income after, say, fishing season. Will they be fined or billed for receiving Apple Health for 6 months when they had no income when they file their tax return that is higher than qualifying for Apple Health?
They will not be penalized because Medicaid is based on current monthly income. So remember what we talked about earlier, you have the choice of either doing current income or averaging your income. In this situation, if the family wanted to have Washington Apple Health during those non-fishing season months, the family could do so, and they would be entitled to do so because it is based on their current income.
Do clients have to report child support income? Is this countable?
No, child support income is not countable. Now remember, spousal support income is countable, and spousal support expenses that one spouse pays to another spouse is deductible.
If it is the first 5 days of the month, then do we still consider the month's income?
Yes, so once you're in the current month, you would enter in the expected month or the expected income for that month. If you have any clarifying questions to that question, that might help us give you a better answer.
Does VA widow's income count?
VA widow's income. So
I know most does not, but that might be one we need to clarify, and then we'll get back with you.
Yeah. So if you can.
I have her information.
You have their information? Okay. So we'll research that. The problem when you get into all of these different types of unearned income is that we have to look at the nature of the unearned income and even look at whether that unearned income was called out in the Affordable Care Act or in the regulations that were promulgated under it.
Can you remind me where we need to enter Social Security for a child with disability, and if so, where would we enter it? So I think this one is important to talk about the difference on whether a child is receiving Social Security disability payments or are they receiving SSI. So, and so again, SSI does not count, is not countable, but Social Security disability payments are countable, and those would be listed under the question that asks for Social Security income or railroad retirement income. Okay, let's see here. Okay, so just a little clarification. When income is negative because of business loss, when I try to input $0, the Healthplanfinder does not let me continue. So I've been putting in $1 so the application will allow me to proceed.
That is good to know. We received the guidance straight from the Health Benefit Exchange that to enter 0. So we'll definitely send that back, that you need to enter in some positive number.
It seems that the Healthplanfinder will only let you report income changes twice. If you want to report a third income change, the system seems to give you an error. Is there a different way of doing this? That's new to me. I haven't heard that.
Well, it doesn't surprise me, though, because it's probably they're not wanting to encourage, sort of shopping for the right answer in the Healthplanfinder. But we'll take a look into that in terms of, if you reported in a change in or an income and then you corrected that income, and then let's say the next month you have an adjustment to that income. We'll try to give you more parameters as to how that works.
I'd just like to make sure that if a pregnant woman reports a change that is over the limit for pregnancy medical, does this person Will this person remain eligible for Apple Health until her due date? And the answer is yes, because pregnant women and children both have continuous eligibility, which means that income changes do not affect their eligibility. Okay. If the applicant is going through a divorce but filing taxes as married, do we list the soon-to-be ex income on the application? And if so, what do we do if the person refuses to give us the income information?
So if they are separated and working on dissolving the marriage, then their expected tax filing for that year is not going to be married filing jointly. If it's close to the end of the year, then it may be married filing separately, in which case you just need to report the one spouse's income and deductions.
What about if they're living together?
And then, so if they're living together, then you need to look at whether they are legally separated, because if they're legally separated, then it has essentially dissolved the community of the marriage, and as of the date of the legal separation. And so at that point, you would want to you could look at it as they're married filing separately. If they are living together, they're they're separated, but they haven't filed a dissolution agreement for the marriage. Then we would recommend that you need to enter in the information for both spouses. Now, if one spouse is a victim of domestic violence, and that's what's leading to this situation, then in that situation you could still indicate that they are married filing separately.
Okay. If you are on Apple Health, but your income is over, would you be, so it must mean if you're a current recipient of Apple Health and then you report a change and your income puts you over the Medicaid standard, would you then be eligible to buy insurance if this takes place after the open enrollment period, which ends on March 31st?
Yes, that will be a qualifying event, and so you would be given the opportunity to purchase a qualified health plan with tax credits if you qualify for tax credits. And if you don't, then you could purchase a qualified health plan without tax credits.
Can someone claim a dependent living outside of the United States? I believe we researched this and the answer was no.
Yeah, so the tax dependent rules, we would have to go back and look at that with that question in mind, but off the top of my head, I believe for most tax dependents, they need to be living with you.
Okay. Why is it that when an unmarried couple with common children apply, only the mother is eligible for Washington Apple Health, but the father isn't when both their income is countable?
Okay, so this is an issue of who is the primary applicant. So in the situation you're describing, it sounds like mom was the primary applicant. You needed to include dad's income to give us the ability to calculate the household correctly, the eligibility for the household for the children correctly. However, mom, who is not married to dad, cannot apply for dad. So that's why you're seeing dad being given the opportunity to purchase a qualified health plan. What you need, disregard that result, and you need to apply for dad separately.
Does Roth IRA income need to be reported? Is it countable?
My initial thought, it is actually identified in the Healthplanfinder questions. I believe it is not countable because the person receiving the Roth IRA income has already paid taxes.
For a child who's receiving Social Security disability, the child's name doesn't pop up for us to add this. How would we enter this into Healthplanfinder? Does the income come in the parent's name?
Yeah.
When they're a minor?
Yeah, I think so. So you would enter it as the income of the Social Security income for the parent, even though they're receiving it on behalf of the child.
Do we count parents' income for a 19-year-old that the parents claim as a tax dependent for the year 2013, but the 19-year-old is going to be single filing taxes on their own for 2014?
Yes, so you would not need to provide the parent's income because the child is an adult and living on is not being claimed as a tax dependent. The Healthplanfinder, so in 2013, you would want to report the income accurately, so you would indicate that they were a tax dependent of the parent. But I believe that's going to give you, it's going to trigger you to need to provide that information on the parents for 2013 and then 2014. So I know that the Healthplanfinder is working on this, and in the meantime, if the child is, for the current year, not going to be a tax dependent, but was a tax dependent the previous year, you should indicate that the child was a non-filer for 2013.
Okay, so when a family is already receiving Washington Apple Health and there is an income change and it puts them over the federal poverty level, does that change the coverage for the children or put them under Children's Health Insurance Premium program?
So it all depends on what the income change is. And it's not just the federal poverty level. The children are covered up to 312% of the federal poverty level. So if the parent's income increased to above 312% of the federal poverty level, then they would trickle to tax or the CHIP program with premiums, but they would still retain their eligibility for Washington Apple Health coverage for the year.
So a bit of clarification. When talking about the parents who were going through a divorce and towards the end of the year, the applicant could file married filing separately, but it's my understanding that the applicant would then not be eligible for health insurance premium tax credits.
That is correct. So we're looking at Medicaid eligibility, but for tax credits, the applicant would need to apply either married filing jointly or single filing taxes. The problem when you're at the end of the year is that the state does not allow you to actually finalize your divorce for, I believe it's 3 months. And so if you're close to the end of the year, you're not going to be able to file married or be able to file as single filing taxes. And so that, unfortunately, could become an issue for someone in this situation. And we could work with someone in this situation to make sure they get the correct outcome.
How do I report a tax deduction for a college student who lives away from home and the parents are paying the tuition and college expenses when the 20-year-old has filed their own tax return as single filing taxes?
So here's an issue of whether those college expenses are in fact deductible by the parents. That was that line item in the Form 1040. So I do not, again, recall off the top of my head what the requirements are for that line item on the Form 1040. But if the parents are allowed to take those as tax deductions in calculating the adjusted gross income, then they would be able to enter that in response to the question of if you or someone in your household is a student attending college. So that will be line 34 in the Form 1040. Now, keep in mind, though, that if the student is planning on returning to Washington State and is only there temporarily, then the child could still retain residency status here in Washington.
For an adult child who has obtained their employment authorization card through the deferred action, are they eligible for Washington Apple Health if they are still in high school?
If they are still in high school, yes, they are eligible for Washington Apple Health up until age 19 because they are eligible under the state-funded Washington Apple Health for Kids program. However, They are not considered lawfully present for federal requirements, and therefore once they turn 19, they would not be eligible for Washington Apple Health unless the child became pregnant, and then would become eligible under the state-funded program again.
So just as a follow-up to that, so if they're already 19, then they do not qualify?
Yes.
Right, because they would then need to be determined eligible for the new adult program, and they must be lawfully present and met their 5-year bar,
yeah,
or a U.S. citizen. Okay, a lot of great questions. Thanks, everybody. We're going to go ahead and move on.
So we're trying to make sure this information is available for at the end of every webinar that we put on, so that you never have to look far for it. So this is the Customer Support Center referrals list. As you can see, for questions having to do with the classic Medicaid, you would want to call DSHS, their Community Services Division Customer Service Contact Center. And so this would include questions about SSI-related coverage and SSI coverage that is provided by SSI, as well as aged, blind, and disabled coverage, or the long-term care program. If you have a question about Healthplanfinder or health insurance premium tax credits, or about purchasing a qualified health plan, you would call the Healthplanfinder Customer Support Center. If you have questions about Medicaid eligibility, including needing assistance to apply for Medicaid coverage in Healthplanfinder, you would call the Medical Eligibility Determination Services. And then once your client is enrolled in Medicaid, then and if your client has questions about billing or claims, then you would call the Medical Assistance Customer Service Center. Here is the county assignment for the various HCA area representatives. They're on this page and the next page. So if you have any questions as a navigator about your application, if you're having trouble getting an application through, and it's involves an emergent medical condition for your client, feel free to call any of these people on this list who are servicing your area. So thank you for attending our webinar today. We encourage you to visit the Medicaid Expansion 2014 website. That website has online trainings, webinars, and many helpful resources regarding the expansion of Medicaid, including the 2 items shared previously. And those are the Customer Support Center referrals list and the HCA area representatives contact information. In addition, you can always email us at medicaidexpansion2014@hca.wa.gov if you have any questions about eligibility or trying to get applications through. Our next scheduled HCA Medicaid Update webinar is on April 10th from 2 p.m. to 3 p.m. In that webinar, I believe it's Kevin Cornell. We'll be covering the newborn process, how do we enroll newborns into Medicaid, as well as the retroactive coverage process. Registration announcement was sent on March 26th, that was yesterday, through various email distribution lists. So please feel free to register for that webinar.